we'll get started. So good morning. I'm Rebecca Jennings, Principal Client Advisor here at Global Reviews. It's my role to talk to you for the next half an hour, 45 minutes or so, around some recent research we've been conducting in financial services and focusing on some of the key pains that have come out of that research across the territories that we've been looking at, along specifically around looking at dealing with existing customers and returning customers. So improving online customer tailoring, personalization for financial services online. We're going to be looking at some of the recent data across several financial services markets in the UK and Australia. We're going to be looking at the data itself, but also, most importantly, what companies can actually do about those pains that they are suffering when they're talking to consumers, and encouraging consumers to engage in applying for or actually going through the process of applying for these financial services online. So very quickly this morning I'm going to tell you very little bit about Global Reviews, just for those of you who may not be familiar with the company. I'm going to talk to you about the methodology of how the data I'm going to talk to you about is produced on an ongoing basis. And then I'm going to talk to you about the actual data itself, what it says, and then but also, most importantly, what it means and what it means for companies and what can they actually do about the pains that they are experiencing when they're engaging with consumers through the consideration and act phases of looking for a financial services product. Hopefully there was some time for questions at the end. If not, my email will be available at the end. Very welcome for you to contact us afterwards with any questions or a copy of the slides. Indeed, the webinar itself will actually be on our website and on our YouTube channel over the next couple of days, so you can refer to the webinar itself. So very quickly, who we are. As I say, I'm Rebecca Jennings. I'm Principal Client Advisor at Global Reviews. I've been with Global Reviews for around 6 years now, but have something in the region of 20 years of experience within media marketing and customer experience through Forrester Research and the BBC and management consulting before that. Global Reviews itself has been an expert within this industry for some 16 years now across territories, across the UK, Europe and Australia. We are a leading research, insights and advisory company producing original data on exactly how your customers interact with you, both when they're looking for a brand within your market, and then how they actually interact with you when they're on your website. And what we do is very much a benchmarked methodology, so we're seeing how you do, but we're also seeing how your competitors do and how you stack up against each other and what you can learn from each other, but also what you can learn from leading brands outside of your industry, which is one of the key things that you'll see as we go through the presentation, is insight not only from your own brand and your own set of competitors, but also from outside of your own competitive set. We work with brands across a multitude of industries. Obviously in financial services, we're going to be talking about today. We look at a number of different verticals, so mortgages, current accounts, savings, investments. We look at a number of types of insurance, so car, motor, home, but we also look at other industries such as telecoms, energy, retail, sports betting across the territory. So we are running research across hundreds of companies on a 6-monthly, yearly basis. So there's a lot of insight from the data on what's best practice, what works, and of course what doesn't. So that's who we are. In terms of the data, in terms of what I'm going to be talking to you about today, we're going to be looking specifically at our digital sales effectiveness research that looks at the consider and act phases of the purchase and consideration process, the sales cycle, the piece in which consumers actually come to your website and think about buying products from you, looking at your product range, finding a price, finding an interest rate, making sure the product actually meets their needs, and then actually going through the application process. This is research that takes place on your website, but as I said earlier, it's a benchmarked activity. So we look at not only your website, but we look at a bunch of competitors within that vertical. So something in the region of 8 to 10 brands in every DSE that we run. The DSE, as I say, looks at how consumers interact on your website and on your competitors, but also looks at a range of data from a best practice audit. And I'll touch on where the data comes from in a moment. So the DSE looks at the consider and act phases. We also have insight into the first phase here, the discover phase, which is what you'd call the DME, the digital marketing effectiveness studies, and they also run across the range of industries I was talking about a moment ago, and they look at how easily consumers can find you. So blank screen study, go and find a brand in this market to get a mortgage from or to take out a loan. Who do they go to? What search terms do they use? In Google, for example, which brands do they visit? How do they actually essentially come up with a short list and then make a decision? But what we're going to talk about today specifically is the DSE is taking that the next step further. So how effective is your own website and making people want to buy from you, and how does that compare to the other brands in your competitive market? So as I say, the DSE and the MSE, which is the mobile equivalent, really take in data from essentially sort of 4 different types of data. Some from consumers actually being asked to do tasks on your website, and then some from a best practice audit that's conducted by our own internal experts within Global Reviews. So customers, in-market consumers are actually in the market at the moment looking for that product, be it savings or mortgages, are asked to go to your website and undertake a number of tasks and a different set of consumers to each brand in the benchmark. So the consumers are asked to do a number of things. It might be find a particular product, find a product with a particular interest rate, find a particular product that has a particular coverage area. So looking at what you've got and can it meet their needs. They do it on their own technology in their own homes. We download a little piece of technology to their browser which tracks everything they do. So we can see in real time which pages they're visiting, how long it takes them to find information, where they go en route. Is it an easy process? Do they bounce back all over the website looking for something? So how long it takes, do they succeed in finding this information? We then have some insight from their attitude to the process. So what did they think of that task to find particular information? Was it hard? What were their key problems? What were they expecting to see? What were they actually think of that process in real life? And then we have some insight from an audit where they are asked to look at the features and functions of the website, say the comparison tools, and tell us what they think and what they would be expecting to see in this kind of environment. So there's insight from the consumers across what they actually do, what they think about the tasks and how hard they were and what the problems they encountered, and then the wider features and functions of the website. And as I say, then that is overlaid with a best practice audit, which is a couple of hundred yes/no questions across the journey, across the consider and act phases, and that is evaluated by experts within Global Reviews, and that's an audit that is bespoke to this industry. It's updated on a yearly basis from our knowledge, but also lots of external research. It really is looking at what is best practice from the company, the brand point of view, but also from the consumer's point of view. So altogether, we have probably something in the region of 400, 450 pieces of data that go into each brand's evaluation for each DSE. And that is, say, that's for each brand. And there are probably 10 brands in each DSE, and we'll see that in a moment. So that's really hopefully give you a quick insight into where the research we're going to talk about comes from. It comes from a combination of actual insight from consumers being asked to do activities on your website, and then different consumers being asked to do it on your competitor's website, and that is combined with this best practice audit information. So you're getting both views here of the journey. And then obviously all that data is used to create expert insight when we actually talk to clients. It's not just about the data, it's about, well, what does it actually mean for you as a brand? What can you actually do to improve the experience you're giving to consumers? What are the key pains you're coming across across the journey? And we'll look at the stages of the journey in a moment. So starting off with the macro view of what's going on here, the sort of very top level, all of that data is combined across the journey, across the consider and act phases, across the insight from consumers and the best practice audit. It's all combined together, and the ultimate output from the research is a score, is the customer experience score for each brand. It's a percentage, and roughly we would say that if the brand scored less than 55%, there were likely to be key pains across the journey at each stage. If it scores between 55 and 63, it's doing okay. So the traffic light, it's doing amber. There are probably some key pains across the journey, but there are areas in which it's doing okay. A green score of 64 would indicate that it was probably meeting basic customer expectations across the journey. There is a lot of headroom there. Obviously, as I say, it's a percentage. It's out of 100. So 64 still means there's a lot of stuff that's not being done, but it's probably not performing too badly across the journey. So we have the customer experience score. As I say, it's a top line indicative indicator of how the brand is doing, and then we drill down into much more detail ongoing about where those key pains are across the journey, but at least gives us a top line indicator of which brands might be doing reasonably well versus which brands will have significant pain across the journey. So at a macro level, let's look at some data across savings, mortgages and investments across Australia and the UK. So here we have a variety of brands and a variety of markets here together to give us a sort of global view, if you like, across these markets. As I say, we've got savings from the Australian market, we've got mortgages from the Australian market, but done across the mobile device, and we have investments from the UK market. This is all very recent data. It's all towards the end of 2015. These studies are normally run on a 6-monthly basis. The DME, which I talked about earlier, which is the open screen, blank screen, go and find a brand, is usually run on a monthly basis or a bi-monthly basis, because obviously that's much more fluid. It's very much influenced by what's going on in marketing at the moment, what people have seen in other channels perhaps, and what kind of advertising, SEO, PPC is going on at the time. The DSC and the MSC, which is looking at the experience they actually have on the website, is run on a 6-monthly basis. So this is all very recent data from the end of 2015. So really this is just to set the scene. So this is the macro view to say, overall, what kind of scores are we getting out of these industries at the moment? Financial services, generally speaking, across the industries that we look at, financial services scores fairly low. The highest scores we get tend to be in sports betting, of all things. We get low 70s occasionally within sports betting. We get generally lower within the complex financial services products. So mortgages, possibly, and investments tend to be lower, and that's being borne out here. As you can see, the red is the UK investment scores, and the dark green is mortgages, mobile in the Australian market, and then the savings come a little bit higher. Nobody's scoring over 66, as we saw. I saw mentioned as earlier. We'd normally say about 64, 65 was okay. So actually what we're getting here is a lot of brands that are only just edging into the sort of yellow bit there, where things are kind of okay, but there are probably some key pains across the journey. We've got a fair few here really falling into that below around 55%, where we're saying actually there are key pains across the entire journey here for brands such as, for example, Legal & General, Lenville, Barclays, NAB across mobile. There are going to be key pains across each stage of that journey. As I say, this is very much the macro view. The key thing here really is actually the overall score is indicative of what's going on the journey, but actually what you really need to understand is what's going on at each stage of that consider and act process. We then break down those consider and act phases obviously into more discrete steps, which are then broken down themselves into more steps, but the consider and act phases themselves are broken down. So consider is broken down into 4 steps. So initial engagement looks at when consumers first come to the site. Does it look as if it will meet their needs? Does it look as if they will trust the site? Will they spend any time actually on the site at all, or are they going to be saying immediately from first glance, doesn't look as if it meets my needs, I'll be going somewhere else? Does it cater for them as returning prospects? So these are financial services products which are a little bit more complex than the average. We're not looking at products people are likely taking out in the first journey. They're going to be coming, they're going to be looking, they're going to be thinking, they're going to be comparing. So anything you can do to help them in that journey is going to be really valuable, and we're going to be talking about that. So then after initial engagement, we're looking at introducing options. What do you have? Can I find a list of, say, your savings products really easily? Can I understand what it is that you're actually offering? Evaluating options, take that next step and saying, well, actually, does this, I found what you've got, but does it suit me specifically as an individual? We all think we're unique. We all think we're individuals. So everybody wants to come away from this kind of process thinking, yep, I found a very specific product that suits my very specific needs. So what can you do to help consumers understand the product you have really does meet that? And then we have facilitating decisions. So if consumers have a question, can they reach out to you and ask that question? Why would they choose you? They've got 3 or 4 options on the table. They're all very similar. What is it about you that makes you different? And then into the act phase, we look at channel selection. How will they do this interaction? Are they going to do it online? If they're going to do it online, can you reassure them it's safe, it's secure, it's quick, it's going to give them a decision in a certain amount of time, what actually is going to happen next? And then actually, obviously, through the application form itself. Some brands enable you to go all the way through the application for these financial services products online. Some require you to go offline. So where you can go through the application form, we go through it. We take consumers through it, and we try to understand the pain that they have as they go through the process and what they understand and how easy it is as they go through. And in this particular case, we're going to be looking at how easy it is perhaps for returning customers and existing customers to be helped through that journey. Do brands actually help their existing customers sufficiently when they're encouraging them to make applications online? So as I say, we looked at the macro. Let's start drilling down a little into the steps I've just shown you a little more. So actually looking at those steps across the journey. Here we're looking at industry averages. This is always interesting to look at because it starts to show where the industry has pain overall, where it might be actually there is an industry problem with a certain element of the journey, be it often evaluating options, it's often facilitating decisions, and you can see both of those here being industry pains really for all of the industries we're talking about. Financial services does generally have a issue with effectively communicating to consumers that they have products that suit their specific needs. Showing them a list of products, yep, fine, anyone can do that. Producing a list of your savings rates or your mortgage rates, fine. Actually then communicating to consumers that you've got a product that suits their specific needs, helping consumers wade through that pile of products is a challenge. And then also we see in many industries the challenge around facilitating decisions. So this is the piece around why would you choose you? Can you ask questions? Is there contact numbers? There seems to be a huge antipathy towards putting contact numbers and phone numbers and opening hours on websites and producing contextual FAQ, for example. So it's interesting to look at industry averages and sort of start to bring out where the industry pain is. And obviously for you as a brand, you can then look at how you compare with those averages, and are you above, are you below? Is there something you can learn from the industry if you're perhaps considerably below the average? What is it that that you're not doing that some of your compatriots maybe are? And as you can see, I say there are some industry pains here, and we've generally low scores across most of these stages. It's not the case that one stage is doing amazingly well, is dragging everything up. Most of these were doing fairly poor scores on particularly UK investments and mortgages mobile. However, the flip side of that is then looking at the high scores each stage and saying, well, actually, you've seen the averages, that's interesting, but actually let's look at the high scores and see if it's possible to get a good score in each of these, really, whether it really is something endemic in the industry that makes it impossible to do, or whether actually, with a bit of thinking and the right investment, it is possible to pull up those scores. And in many of these stages, that is absolutely the case. You're seeing, for example, here ING Direct and RAMS in the Australian market getting 69, 71% within evaluating options. So really getting above those industry averages and bringing those up. So it's entirely possible to do well within that area. Facilitating decisions is still on the low side. As I said earlier, we often find this. We often find that most industries really struggle with this. Most industries struggle with putting the right contact details out there in the right places with the right opening hours, getting those contextual FAQs out there at the right time in the right place where consumers really want it, and not forcing them to go through extensive online help sections to find the answer to their queries. But say that the key point here is really that firstly, it is possible to get higher scores in some of these stages, but also when you look at it, it's not the same brand that gets the high score across the whole journey. RAMS obviously do very well, particularly in the Australian savings market. They've got the high score at 3 points, but actually not across the board. You've got NAB, sorry, you've got Westpac, you've got Commonwealth Bank. In the UK, you've got a whole range of brands. I think there's a different brand at pretty much every step. So it's not the case that one brand here is getting the high scores across the journey. It's not the one brand that's really cracked it. There are different brands at different stages doing well. So it's something to learn across the journey from a lot of different brands in the market. But also, as I say, it's often something to learn from brands outside of your market. And we'll see that as we go along, particularly in areas where the industry scores lowly. So things like facilitating decisions, things like some areas within initial engagement we're going to see in a moment. It's actually best to look outside of your own industry to learn what other industries are doing. So now we're going to start drilling down. We've had the macro view, and now we're going to start looking, as I said earlier, at this micro view, drilling down further into a couple of these steps and looking at some of the things that the brands can do. So one of the things we're going to look at is within initial engagement. So this is the piece where people first come to the website, looking at, does it meet my needs? But specifically this problem about dealing with returning prospects. As I said earlier, these are complex financial products. These are not things people are going to be spending 5 minutes. Yeah, that's it. I'll do it. It's done. They are going to be looking at your offerings. They're going to be going to somebody else's brands. They're going to be coming back. They're going to be trying to make a list of what their options are. They're going to be scribbling down pieces on pieces of paper. Anything that sites can do to make that returning prospects journey easier is going to make it more likely that they carry on with you and that they come back because you've made it simple and easy and you haven't made them do all that work again. And pretty much all the sites in our research across these territories do this very poorly. So saving sites here, Australian saving sites, as you can see, pretty much everybody with the exception of Commonwealth Bank doing a very poor job here. Similarly within the UK investments, a lot of 0 scores here in terms of dealing with returning prospects, and again even lower scores within the mortgages mobile sites for Australia. So generally across all of our financial services research, brands dealing very inadequately with helping returning customers really understand or really help them to keep doing that research, and to kind of encourage them to come back to say, you won't have to do all this research again, we'll save these products for you, we've got these pages saved, you can just come back and go straight to those mortgages that you selected or those savings products that you selected. I said earlier that we track everything that consumers do, so part of the insight we have here, part of why we can see this is a complex journey and that people are getting frustrated is obviously through that tracking. And this is a piece of research from the DSC. It's a sample journey from one of the brands for users trying to find actually an investment product. So you can see the clickstream at the bottom. We have that for every task that we conduct, so you can see exactly where consumers have been. And obviously you can see just from the look of this one that it's long. Consumers take many different paths. There was no obvious path through the site to find the product that we'd asked them to find. They bounced backwards and forwards. Many of them took many clicks and pages. In fact, the maximum was, I think, 18 pages, 29 clicks to try and find the product. And some of the quotes from consumers who were asked, how did they find the journey, how did they find the process, couldn't find it, would have given up in reality, went round and round the houses. So people finding it really hard to find specific products. And actually, this is a journey they're having to do time and time again, particularly if they're comparing products across websites. They're not just doing it on your website, they're doing it on 3 or 4 others. But also, if you're not dealing with returning visitors well, you're forcing them to do that journey several times. There's nothing more frustrating. They found something they were interested in, they've gone away, looked at a different website, come back and, oh, I can't find it, I've got to go round the houses again, I don't remember where it was. It's all very frustrating. And people will give up in frustration, almost sort of death by 1,000 cuts. There's no one big problem, it's no error 404. For those of you with very long memories about websites, there's no death of error 404, but it's just little things that people are just frustrated, and that's not the right thing, that's not the right thing. I'm 18 pages in and I still haven't found this product that I'm looking for. So really, the first thing we're going to sort of make the point here that comes out very strong is ensuring facilitating those returning visitors' journeys are easy. Savings investments, as I said, complex products, don't make users do that research over and over again. Consumers who have already gone through the effort to view and research products are already down the purchase funnel. They've made that effort. They've invested the time in you. They've gone through the initial engagement enough to say, actually, no, I do like this brand. I trust you. I'm going to make some time and effort to actually find out whether you've got a product that suits my needs. And they're almost at that, as I say, win over stage. And actually, you could really make the difference here. If you make them do it all again, you're going to lose them. So really think about facilitating previous users' visitors by making it easy to access previously viewed information and tailored content. It could be simple things. So, as I said earlier, what we try and then do is bring this data to life by actually saying, well, who does this well, who does this poorly, and let's look at some examples. So, Access Self-Investor, this is a UK website who help consumers actually make investments into funds, so investment into stocks and shares. They have a nice tool on the website that enables you to filter funds. They have hundreds of funds, but they have a nice tool in which you can say what your priorities are. But rather than having to do that every time you come back, you can save interesting funds to a short list. It's always accessible on the constant nav bar throughout the website, and you can come back to later to say, okay, those are the 3 or 4 that I thought were really interesting. Now I can easily compare those with what I found from, say, the Legal and General website or whatever, whoever it is you're comparing it with. It just means that I don't have to go and do that filtering again. I don't have to figure out what all the new things mean. I've managed to save those interesting funds. I can immediately come back to them later. Very easy to use. Let's say constant access to that. It's always at the top nav bar. It's not down in the website. I don't have to go and find my list again. It's always accessible, nice and easy at the top of the website, much like how Commonwealth Bank does as well, has been doing for a while, enabled users to pin stuff I like. You see on the right hand side the star, where consumers can just sort of click the star icon located at the top of each page, which links into that stuff I like area. So you can actually do it yourself. You can say, this is the kind of thing I want you to keep because I want to come back to it. But also some of the added functionality here, it's not just consumers saying proactively keep this for me. The site also helps users by saying, actually, this is the history, this is where you went. So if you can't quite remember what it was that you were looking for, this is where you went, and hopefully that'll help you jog your memory as to what was interesting. So it works both ways. Consumers actively saying, yeah, that's interesting, I'll have it, but also saying, okay, this is your history, this is where you've been. Hopefully that will help you figure out what was interesting and what wasn't. So it's sort of complementing those active. And again, this is a classic example where looking at what other industries are doing can be really illuminating. If your own industry is doing something very badly, it's actually often more interesting to look what other industries are doing. So in travel, for example, Webjet will remember your recent search. If I search from a flight from Melbourne to London, it will remember that. It will remember. I can just click on search and it will do that search for me again. It will also personalize the content on the site based on that. So I'm looking for a flight to London, so I might very possibly be interested in London hotels. So that little block will show me London hotels. So this is not only helping me as a consumer coming back and making it much easier for me to do that search again rather than having to find the airports and do the dates and everything again, but it's also helping Webjet as a brand to retarget me, to retarget consumers with better, more appropriate products. So it makes the consumer's life easier, but it's also helping the brand make more use of that data and be more helpful to the consumer in terms of retargeting, obviously improving their experience and ultimately improving the likelihood of a sale, because really that's what this is all about. Improving customer experience is ultimately about increasing their likelihood of actually transacting and becoming a loyal, ongoing customer. So travel, we've got examples in education, so Swinburne University, accommodating returning customers by allowing them to add courses. So again, there's a lot of courses, diplomas, degrees, certificates that you can be browsing through. Perhaps you're not quite sure what you want to do, what you want to commit to. So you can save them to a favorites area where you can think about what it is you really want. You can see what other institutes are offering you. And again, without having to filter through all those hundreds of products and courses, again, you can go straight to the stuff that's actually interesting to you. Again, they are linked right there from the top of the page. It's not deep in the website where I can have to go and find where I've saved my favorites. I can come straight back. These are the favorites added from the top nav bar, very easy access. And I can save and retrieve that information without having to go through the process of setting up a login, giving you my email, trying to remember a password across, say, 4 or 5 different websites where I'm trying to do the same thing. It's made really, really easy at this early stage of comparison for consumers to save that information. So it's really easy at this point for them to say, actually, it's much easier to transact with Swinburne. I've gone straight into the information. I can't find it on the other websites anymore. It's too hard. I'm going to go and talk to Swinburne because they've just made my life much easier and they've got the stuff that I'm really interested in. And the problem, obviously part of the problem here, is that sites like Amazon and Gumtree are really setting the expectations in consumers in what can and cannot be achieved. Everybody knows that when you go to Amazon, it remembers what you've looked at. It makes recommendations based on what you've looked at, also what you've bought, but also very much what you've looked at. It's not just based on you actually having bought things. It's also based on your behaviours around your browsing. So you don't have to be logged in. You don't have to have bought anything on these sites for this to work. So it encourages you to carry on browsing by recommending products, but as they also displays your history, what you've actually viewed and items related to what you've used. Gumtree, very similar, remembers your recent products and categories, displays these on the home page. You can go straight to products you might be interested in. And the issue with that is obviously it is easy, we're all used to it, but it sets expectations. Consumers are thinking, well, actually, if somebody like Amazon and Gumtree with all these thousands of products can make this work, why can't you? Why can't other brands make my life as easy as Amazon and Gumtree do? So really, that is what you're up against. So what are we talking about? We're talking about letting consumers save favorite pages, favorite products, favorite accounts to come straight back to next time. Don't make them do that filtering. Don't make them do that research all over again. Let them access it quickly and easy from each page of the site, that top nav. Don't make them dig around for it. And recognize and reward previous visits actively too. Last time you visited, you went here. Other interesting pages based on what you visited are here. So show them, let them save what they're interested in, but also help them take their next step by showing them what might also be interesting to them. Really holding their hand through the process, through the complex financial decision they're trying to make. And then sort of going on here to the last stage of the decision process. Obviously what I've talked about, we can drill into extensive amount of data across each of these stages, and we just simply don't have time to do it this morning. What I'm going to talk about now actually is at the end of this process, the application process, where we tend again to get reasonable scores, but actually what you need to do then is drill down into what that actually score is made of and what it actually means for the brand. So we're talking again about existing customers. We're thinking now about customers that perhaps already have products with you, who obviously perhaps have already demonstrated clearly that they trust you, and ideally you should make it as easy as possible for these guys to go through a purchase process with you. And actually a lot of the brands, again across financial services, deal with this pretty poorly. One or two here not doing too badly in the UK, but actually generally speaking we're getting scores of 30% so not great. Some Australian savings sites do a reasonable job, but again, on average, pretty poor, and again, a couple there scoring very badly. And similarly with the mortgages mobile, a very mixed bag here in terms of dealing with those existing customers and making it as easy as possible for them to go in and make purchase decisions. So time after time, a consumer will come to a purchase process, and if you're an existing customer, you're left with the question of saying, well, actually, what do I do if I already account? I want to apply for this ISA, but actually I'm already a customer of Nationwide. A Nationwide client, very keen on facilitating existing customers. Very much their business model is at the moment to try and expand the number of products that consumers have with them. So really important that actually if somebody is trying to buy a product online, they are encouraged to tell the brand. It's really important, or you would have thought it would be very important, that the brand know that they're an existing customer, but that just isn't being done. And similarly with Santander and Ubank, the opportunities which to make these customers feel valued, make their process quicker and easier, are being lost because they're getting pushed down the same process as everybody, which, as I say, really misses opportunities in order to make those consumers feel like they're important to you and you want them to have a seamless experience. So time and time again, these opportunities being missed. Westpac have a couple of areas where they do this. So within the savings area, consumers are asked, are they registered for online banking with Westpac? So no, just carry on. Yes, and then they're pushed into signing in and asked and told why signing in with your Westpac credentials can help speed up the process. So why would you want to do it? Oh, well, it'll help speed up the process. So encouraged. Slightly differently, but also similar process within credit cards, not mortgages, which is obviously what we were looking at here. So it's not done within mortgages, but within credit cards, they do make an effort to capture those existing customers. Are you a customer? Then are you registered with online banking? Signing in will help you speed up the process. So not only are you a customer, but then encouraging you to then go on and register with online banking and go through the process. So just capturing those consumers and encouraging them and telling them why it would be easier for them to actually go it through as a registered user. Helping both Westpac, obviously, to connect the dots, having a one single view of the customer, but also helping the customer. If it's going to be a quicker and easier process to do it through their online banking, then absolutely that's going to help them and encourage them to finish the process. Legal and General in the UK, very similar. If you're an existing customer, please enter your ID or log in. They make it optional. You don't have to do it. So if you don't happen to have your ID to hand, you don't have to do it. But again, you're encouraged. So you can use your online servicing centre to deal with your funds. It can save you time. And if you log in, you don't have to provide your customer ID. So again, it's not compulsory, but it's really saying this would make your life easier if you can do it. But it also obviously makes Legal and General's life easier because it helps them connect the dots and have a one view of the customer. But it's also helping the customer's life, making their life easier, saving them time, encouraging them to finish the process, but also making them feel more valued, making them feel like the Legal and General understands that they now have multiple products with the brand, and that it's going to make their life easier to do so. So very much here about capturing those existing customers, facilitating a speedier application and letting them know that's what you're going to do. So letting them log in to continue application within that application form. Don't punt them over somewhere else, a form that looks completely different. Let them do it from within the process they had already started. Encourage them to do so. And things like allowing online retrieval application status. I've applied for a savings account. I've applied for a mortgage. Let me use my status as an existing customer to understand how well that application is doing. So in summary, hopefully we've shown you here the wealth of data that exists within these products. I've managed to scrape the surface across a couple of panes we're seeing across this research, the DSE, across the financial services markets that we're running in these different territories. I think hopefully we've shown you that no one brand succeeds across the stages. Averages, generally speaking, are low. There's a lot of headroom here. But actually, as we look through it, there are a lot of fairly easy wins that can increase the scores. We're not looking at huge multi-million-dollar investments in order to make improvements. We're thinking about things like shortcuts to previous or popular pages, saving favorites, thinking about clearly defined paths and encouragement to sign in for existing customers, pre-fill of known data if you can do it. So a mixture of little things there and slightly more complex, but also illustrating the importance of keeping abreast of other industries who perhaps might be leading the way in some of these areas, and these personalizations and relevancy. It's really important, obviously, within a benchmark to understand where you sit, understand where your competitive set sits, but also then, in many cases, to see what other industries are doing. It is very much the case that often, certainly within financial services, you're not perhaps leading the way in a lot of this stuff. You are perhaps learning a lot from, say, retail, a lot of the time from telecom. So sometimes it's really important to understand what those other industries and then those other territories are doing, because it might be a brand in a completely different territory, in a different industry, in a different country that's doing something really interesting that you need to learn from. So as I say, what you saw today was a snapshot. It was scraping the surface of those hundreds of pieces of data that we have across each of those brands, across each of those territories. It's very a glimpse. Obviously, there are a lot of opportunities within the subscription services that we run to look at tailored analysis on a very much a micro level. You can ask or request brands to be put into studies, so you can look at your specific competitors of each area. You're not set the ones that we determine. Obviously, it's a collaborative process. You can add 4 brands into the studies that you sign into. Access to historical data through the portal, which is an online access to all our data, but also these insight activation workshops where analysts will come along to your own business and talk through the data and give you insight, as I've talked to you about here, give you examples, give you competitive benchmarking, really bring that data to life. So thank you very much for your attention this morning. If anybody's got any immediate questions, I've got a minute or two, but otherwise, thank you very much to say for your time this morning. I'm Rebecca Jennings, so rebecca.jennings@globalreviews.com. Please do drop me a line with any questions. I am very happy to talk to anybody. If you want a copy of the slides or directed to the webinar itself when it goes up on the website, do let me know. But thank you very much for your attention this morning, and have a good rest of the day.